Welcome back. Previously, we had discussed about the concept of accounting standards and accounting standard board and how it is formulating standards in our country. Next area which we are going to discuss is global accounting standards. By global accounting standards doesn't mean that it is a set of rules and regulations just like accounting standards or international accounting standards. Here, global accounting standards generally means a uniform accounting standards that is accepted globally or uniformly all around the world. So, actually, these are not a set of rules and regulations. It is a concept, global accounting standards. Remember that. So, global accounting standards are the standard set to make the financial statements prepared globally more meaningful and useful by making them comparable with those of different years of the same firm or those with other firms of the same industry. We have mentioned about that in the case of accounting standard. Here, global accounting standards means maintaining uniformity all around the world. And here a term means main purpose is comparable or comparison with those of different years of the same firm. Different years of the same firm means if the organization is following a uniform pattern of preparation of financial statement, that is trading profit and loss account, balance sheet, can we compare the performance of the business for the last 10 years if it has been working for 10 years? Can you measure the performance of the business for the last 10 years? Definitely we can, because they are following same pattern of finding out the performance, that is preparation of trading profit and loss account. It is very easy to compare the profitability or loss of the organization that has been working for 10 years. That is the meaning of comparable with those of different years of the same firm, comparing the performance of the concern for 10 years. And also those with other firms, that is comparing the performance of one concern with the other. All this is possible only if they follow a uniform set of rules and regulations. So globally there is a need for a uniform set of standards that is known as global accounting standards. Accounting standards were set up as a result of long felt need for standardization of accounting on a global scale. The International Accounting Standards Committee, otherwise known as IASC. It was formed for the purpose in 1973 with 9 member nations. This was set up for securing more sophistication and precision in accounting procedures worldwide. In 2001, the IASC was dissolved and International Accounting Standards Board was formed. Now IASB is responsible for issuing international standards. We will discuss about IASB in the coming session. Right now, let us discuss the need for the global accounting standards. What is the purpose of global accounting standards? What are the benefits of a global accounting standards? First of all, it facilitates ethics and compliances. The need for global accounting standards arises from the need for maintaining high level of ethics in accounting practice. Different countries around the world have different cultures and practices. In some countries, bribing is considered to be an accepted fact. In our country also like that. Whereas in some countries it is kind of impropriety or it is an improper practice which can lead to even jail sentence. So there arises the need for global accounting standards. They earlier mentioned that in our country bribing is considered accepted. From legal point of view it is not accepted, but usually if you go to any government office there will be some sort of bribing or corruption or red tapeism even still exists now. Some cases are only caught by the law, but in almost all the cases there will be one or other types of bribing that occur in various areas. So in order to maintain a ethical system of working, and there is a need for a global accounting standard. So it facilitates ethics compliance. Next one, it improves the international investment, because investors in international companies have to compare the performance of companies in different countries. So in order to make profitable investment, the investors has to compare these financial statements of the concern that working in different parts of the country. And global accounting standards or global standards in accounting system and reporting simplifies international investment decisions, because investors can compare the financial statement of companies following international accounting standards or other international guidelines regardless of the company's country of origin. Because through standardization the comparison is very easy. Even the comparison is very easy, the investors will have confidence in investing their money in different parts of the world. So without standards, making comparison will be very difficult and it will be less reliable, as the information present in the financial statements are calculated using different methods. That is why there is a need for a global accounting standards. So global accounting standards improves international investment. Next one, multinational companies. Global accounting standards simplify accounting for multinational companies that have operations in different part of different part of the world. That is known as multinational company. We used to use a abbreviation MNC, multinational companies. One of the most important multinational example of a multinational company is Tata. Tata is having its company all around the world. On following a global accounting standards in all the units working in different countries, multinational companies across geographical region can avoid confusion in accounting and reporting. It helps to increase the system's accuracy and efficiency. So that is another important purpose of global accounting standard. It helps multinational companies. Next one, international trade. So let's see how global accounting standards helps in international trade. Companies increasingly seek strategic partners, or they may look for customers or suppliers in foreign countries. So global accounting standards give a common financial language to companies, which makes them easier to do business together. And international standards also create an international accounting consultation, creating new opportunities for entrepreneurs in any country. All this helps in facilitating international trade. Next one, sets generalized standards. The global accounting standards are flexible enough to account for expected and unexpected changes in the global business environment. That is one of the main issues that is faced by international business world, because they are based on board principles. That is why the global accounting standards are flexible, because they used to cope up with the changes of the international business. With the rapid evolution of e-commerce, the opportunities for businesses around the globe to work with each other have never been greater. We all know that we used to conduct our business transaction to various e-commerce channels, like buying your products from Amazon, Flipkart, like that. All these facilitated your business activities. As a result, the scope and importance of international accounting necessitates general standards that are applicable and accommodative to varying situations. This reduces a business cost of preparing financial statements. So through a generalized global standards, it facilitates e-commerce. Not only that, it helps in smooth functioning of the business that is conducting all around the world. Next one, growth of international capital market. We all know what is meant by capital market. Investing in shares is for a pattern of capital market field. The growth of multinational companies necessitates the need for raising capital from different countries. So because they need huge amount of capital to run its business. This requires the entities or the concerns to redraft their financial statement applying the accounting standards of the foreign countries. If these are not prepared by the following global accepted accounting principles. That is the main purpose of maintaining a uniform accounting standards. Because if any of the countries are not following a uniform standard, it is up to the company to follow the rules and regulations that following in that particular country. Because from the company's point of view, it is very difficult, because they might have prepared the financial statement as per the global standards, and if they go to conduct their business in some other country that not following an international accounting standard, the company has to again prepare their financial statements as per the rules and regulations of that particular country. So it will be very difficult, but by implementing a global accounting standard, that issue can be easily resolved. Then only the international capital market can be flourished. So these are some of the requirements of global accounting standards. Not only that, there are many more aspects from which these can be properly utilized. So let us go to the next one. Better analysis of financial data. For the financial statements to become meaningful, they should be analyzed by the interested parties in different parts of the world. It is analyzed mainly for comparison purpose. Such comparison becomes feasible, meaningful, and effective when these organizations follow a global accounting standards. We have mentioned about that previously. So let us go to the next one. Increasing investors' confidence. We have also mentioned the same point previously. Anyway, industrial growth depends on the confidence of the investors. We have mentioned that. So on following a global accounting standards or global standards in accounting, the investors' morale can be boosted, because they will get a confidence that their money is not going to be wasted, as they have get a better understanding about the financial statements that have been prepared by the concerns who are following a globally accepted accounting standards. So these are some of the main purposes or need of a global accounting standards. Next, let us discuss another important area, IFRS convergence or adoption. We have mentioned about the meaning of convergence, and IFRS means International Financial Reporting Standards. So in order to come under the purview of uniformity, every country or the board, international accounting bodies will try to adopt the international accounting standards. That is known as convergence. So convergence refers to a goal of establishing single set of accounting standards that will be used internationally. That is the meaning of convergence. So every accounting practices or every accounting body that operates in every nook and corner of the world is trying to converge towards an international financial reporting system. Because we have mentioned that why there is a need of global accounting standards. So by becoming a part of global accounting standards only, we can survive in the future business world. So that is why there is a need for IFRS convergence. So convergence refers to a goal of establishing a single set of accounting standards that will be used internationally. Why there is a need for convergence? We have mentioned that there are many reasons. Anyway, in the present situation of globalization and liberalization, and every business is working in an extremely dynamic business environment. The world has become an economic village. The globalization of the business world and the attendant structures and the regulations which support it, as well as the development of e-commerce, make it essential to have a single globally accepted financial reporting system. So if a business want to survive in this extremely dynamic business environment, they have to adapt to the existing system. A number of multinational companies are establishing their business units in various countries with emerging economies. Basically, our country is an extremely emerging economy. Many companies from different parts of the world are interested and conducting business in our country. The companies in emerging economies are increasingly accessing global market to fulfill their capital needs by getting their securities listed on the stock exchanges outside the country. Because multinational companies is going to need a huge amount of capital, and for raising huge amount of capital very swiftly, they have to list their shares in the international stock exchange markets. So in order to do all these, every concern or whatever the body has to adapt to the existing international financial reporting system, that is known as convergence. So capital market, or the market where shares are being buy or bought and sold. Thus capital markets are becoming integrated, consistent with this worldwide trend. More and more Indian companies are being listed on the stock exchanges, not only in our India, but also various stock exchanges that is working around the world. The use of different accounting frameworks and standards in different countries creates confusion for users of financial statements. The data disclosed by the financial statement becomes incomparable. So this leads to confusion and inefficiency in capital market all over the world. Therefore, increasing complexity of business transactions and globalization of capital market calls for a single set of highly qualified accounting standards. That is why there is an emergence of convergence of international financial reporting system, because following of different systems or different accounting standards in different part of the world is very difficult in the present scenario, because a company is not only working in that particular country of origin. It will, if it is working only in that country, it is fine, they can follow the system that is following in that country. But if the company is working in different part of the countries, if these different countries follow different systems, then it will be very difficult for the company's point of view and from the country's point of view. Because if there exist different systems in different part of the countries, then the companies won't go to those countries. Then the company will, or the country will lose those investment opportunities. So in order to avoid all such issues, the emergence of this convergence of IFRS has been adopted. High standards of financial reporting is necessary for creating trust in the minds of investors in the financial and non-financial informations. Because only a trustworthy investor will invest their money in the business. Only a investor is having a trust in the existing scenario will have the confidence to invest. So in order to implement that, there is a need for high set of standards. Thus, the case for a single set of globally accepted accounting standards has prompted many countries to converge their national accounting standards with the international financial reporting standards. That is the main area which we are going to study in this module. Why there is a need for adopting the international accounting standards? The reason for that is discussed now. IFRS standards are considered as principle-based set of standards because they follow a certain rule. Principles, that is known as principle-based. They follow a certain set of rules. They establish broad rules rather than dictating specific treatments. Every major nation is moving towards adopting them to some extent, and large number of public authorities requires public company to use IFRS for stock exchange and listing purposes. So in different part of the world they are adopting the IFRS, or they are converging towards IFRS in order to run in the existing extremely dynamic business environment. So that is known as IFRS convergence. We will discuss about the further theoretical aspects of global accounting standards and the convergence of IFRS. Why the companies or the countries around the world are giving more emphasis on IFRS convergence. We have discussed that, and we will discuss in detail who are the beneficiaries or who are going to benefit from the convergence of IFRS. So we will discuss that in the coming sessions. Until then, go through all these areas.